All right. Now we're going to talk about a few other components of national income accounting. We've talked at length about gross domestic product and the different ways to calculate it. Now we're going to talk about a few other important components of the national income accounting system. The first is called national income. And this is just the total of all factor payments to resource owners. Very similar to domestic gross domestic income, right? Very similar, except that it's more like GNP, right? Where it's the factor payments to resource owners that reside in a country, right? So the nation's income. And then related is something called personal income. So this is the amount of income that households actually receive before they pay personal income taxes. So personal income is basically, think of it this way: like if you're working a job for $15 an hour, and you work an hour, your personal income is $15, but that's not what you actually bring home, right? So you have to pay some taxes, right? So you're not going to get that full $15, which would be your personal income, but rather what you bring home after you pay taxes is called disposable personal income. So the money that you can actually spend after you've paid your income taxes, right? So that's disposable personal income versus personal income. All right, so here we've got gross domestic product. It doesn't really matter which way we got it, income approach or expenditure approach. Now, if we take away depreciation, recall that when we take away depreciation from GDP, that gives us net domestic product. Now, if we add to that any income that the U.S. residents earn in other parts of the world, which is what's called net U.S. income earned abroad, and then we also add that statistical discrepancy, we get what's called national income. So that's national income. It's basically the income that's paid to all of the factors of production owned by a country's residents. Now, once we take away corporate taxes, social security taxes, taxes on production and imports, and then we also take away from that subsidies, which are negative taxes. We get, and then we also add net transfers and interest. We get to personal income. Now, I know this seems like really overwhelming. Don't worry, you don't need to memorize this or how to do this to get to each portion. It's just an illustration to help you understand what each of these other components is, right? But in any case, we're basically going from GDP to NDP to national income to personal income. And then once we take away income taxes from personal income, the last one we have there is disposable personal income. And so this $14.5 trillion disposable personal income, this is the money that households actually have to spend at the end of the day, or I guess at the end of the year, or in the year. Let's put it that way, in the course of the year.